So there are ways in which, in addition to the other factors we considered, in addition to the fact that you wipe out gift taxes, you wipe out estate taxes, is the opportunity to minimize income taxes. So these are huge factors, and you want to have whoever's advising you in your estate planning or your asset protection planning to consider these factors. It requires sitting down with a calculator and looking at the totality of the picture and doing the math. And you can see over this discussion that we've had in the past several shows, there's a lot to think about in doing these calculations. And you want to consider all these factors. You want to consider discounts that may be involved in the transaction. You want to consider income deflection. You want to consider the minimization of income taxes from your standpoint when you're moving it from income taxes that would otherwise be paid today at ordinary rates. You want to consider the larger picture questions which relate to management of the assets and what your long-term goals are ultimately. You can't let this be entirely tax-driven. And I know there's a temptation, particularly for tax planners, to think in those terms. And it is exciting to us when we identify ways where we can significantly reduce taxes. But that's not enough. We know that we also have to be sure that these savings, whatever they are consistent with your overarching themes or your overarching concerns. And those often relate to asset management issues over time. You're wanting to have your assets ultimately go to those that you care most about in a way that you know will provide the most benefit to them. So all these factors have to come together and have to make sense. I've tried to throw in a lot of the larger considerations. I've avoided some detail here. Some of you think I provide too much detail perhaps. But the whole idea is to equip you so that you interact more effectively with whoever's doing your asset protection planning. I know many of you have lawyers in various states, and so there will be some variation from state to state in terms of the local taxes, but generally that's not going to impact significantly these decisions. Most of these decisions are driven by federal tax issues. But you do want to consider the state taxes, and we know that some states do have significant income tax rates, and that will impact what you decide here. So I hope this has been helpful to you. We'll return to this topic and similar topics over time. Remember, our objective is to think about executive asset protection planning, and we couldn't do that without covering the topic of estate planning. And we'll have to return to this as we think about the larger circle of your life, and we think about what is it that will provide you and your family the most protection. This has been another episode of Cache Counsel. My name's Joe Cordell, and until next time, take care.